Good morning, Paul Georgi from Allendale. It's July 14th, 2010. Well, the outside markets this morning kind of quiet at this point in time. The dollar down 8, the crude oil down 55, and the stock market's expected to open about 14 to 20 higher, according to the indices right now. Some of the things that are affecting those markets, the dollar had a huge down day yesterday, outside day down. We're getting some follow through here overnight, but with that kind of activity and that size of a move in one day, things are a little quiet here this morning in the dollar trading area. The crude oil a little bit lower, profit taking ahead of the EIA numbers that come out here this morning at 9:35, and that news and follow through there is giving us some support in the grain complex. Corn up 1 to 2, beans 2 to 4 higher, and wheat anywhere from a half to 1 higher. Some of the individual commodity news here this morning, we had deliveries in the corn, 874. Again, that is delivered to the street or taken by the street, which means it'll probably be put out again tomorrow morning. The China news out of China is that some of the industrial plants that use corn over there have closed down because they just can't get any supply of corn. The feed mills, they are still able to buy out of this China reserve, but it appears overall that they are getting into a much tighter situation than is led to believe. Now, China's National Grain and Oil Center came out with their estimates yesterday on production, put the corn production at 168 million tons coming out of China, which is the same as what they had been projecting. So the rain and the lack of rain, drought in certain production areas haven't really affected their estimate at all. However, on the soybeans, they reduced the soybean production by about 3.3%, down to 14.5 million metric tons. And the feeling there is they can certainly buy beans easier than they can buy the beans cheaper than they can go out and buy corn. And that is what they've focused on here this year. Other factors in the corn were right up against that 100-day moving average at 385. Then you've got some support under that at 378.5. We still have got resistance at $3.99 to $4. We need to take out those highs in order to make way to that 410, 420 potential. And I think if you look at a chart, it gives you an indication that if we do break above there, we certainly have got a real good chance of going to that 420 area. The weather is also a factor. Some forecasters this morning have taken out the ridging possibility with more of a zonal flow now, which means that the Midwest will continue to get more rain, less heat, ideal for corn production. Some forecasters are looking now after the USDA's numbers on conditions on Monday that we could have as high as 170 bushel acre yield, which certainly is in line with our estimates. The soybeans, technically we've got resistance at 962 in the November contract, support at 947, which is the June highs. It seems like with the action that we seen yesterday, the June highs now will be some key support areas, and that as long as we can maintain that level, it looks like the trend is certainly sideways to higher in a lot of these commodities. We had big outside days in all the commodities yesterday except for corn, so the fundamental picture seems to be weighing on that market. In the wheat market, we've got the June highs as support again, 532 in the September contract, resistance at the 550 area. We had an outside day up yesterday. This morning we're consolidating here, but certainly a strong technical picture in many of these contracts. Fundamental news: Russia is saying that they have got the worst drought in 130 years going on right now. It's affecting 20% of the grain production areas, and their wheat harvest, some news stories out this morning on the wires that their wheat harvest is way ahead of schedule simply because of the drought conditions. Over in the livestock, cattle, hogs expected to open higher here this morning. The cattle market, we closed right on the 100-day moving average yesterday. We need to get above this $91 and close above 91 to maintain this uptrend, and it certainly is possible here today as we currently, where the overnight markets are trading, we're at above the $91 area. Choice select beef pretty much steady yesterday, up slightly. Cash cattle trades expected to be trading at least steady from last week. We're still at a standoff in the southern plains of $90 bid, $94 ask. With the strength in the futures, we're leaning toward higher prices there as we go into the end of the week. In the pork complex, we had the second close under $80 yesterday. That is not a bullish sign. It seems like we're certainly in the mindset that we want to go down and test this support area around 78.52. However, if we do get hot weather coming in here, we're going to tighten up supplies. Although this morning we're seeing cash markets anywhere from steady to $1 lower, basically because of the cutout values yesterday dropped $1.50, and with a adequate supply and weaker cutout values, it is causing pressure in the cash market. With some heat coming in here and the tight supplies that we do have, we could see a bounce in this market. But hog traders are watching weather just like the corn traders are. So something to monitor very closely and keep in touch with Allendale on. We'd be happy to help you there. Our strategy is to look for breaks to be buyers, but being patient at this point in time, let the market tell us which way it wants to go. So if you got any questions, don't hesitate to give us a call here at Allendale, 800-262-7538. We wish you a successful trading day, and we'll talk to you tomorrow morning.